Donald Trump is now saying something that could crash Bitcoin and the overall stock markets even further. He's even talking about a recession for the first time in a live interview. We're seeing the stock markets going down. The S&P 500, even Tesla, is down 15% for the day. Elon Musk says, but it's no problem, everything will bounce back. X has been hacked, which means X is under attack. Now there are some speculations that Ukrainian hackers are behind the whole operation. This adds even more uncertainty to the markets, especially since no news could be shared right now. What's going on with all this market uncertainty and everything? Now it's all back on track. Now we have Donald Trump, who is making massive statements because he is talking about tariffs, and that tariffs could potentially be increased further here. And we have always seen it in the past. When tariffs are increased here, the stocks and economic markets collapse. And Bitcoin is crashing down here. On top of that, we have the whole recession situation. We're also seeing that the recession indicators have been signaling for a very, very long time. And additionally, we're now seeing that the probabilities for a recession are going up in the betting markets. We're now over 40% in terms of the likelihood of a recession in the U.S. Just a few weeks ago, we were still about 15 to 20% lower. That means people are starting to prepare for a recession and speculate about it. And now we have these major statements from Donald Trump that are super relevant for Bitcoin, super relevant for the global stock and financial markets. And we're going to take a look at that. Then I'll give you a little insight. Because in the last 14 days or in the last month or so, it was always Donald Trump who was setting the tone. That's why we need to pay close attention to what Donald Trump is saying. He can pump the markets up and down. That's just how it is right now. And now some people are complaining and saying, yeah, Bitcoin is so dependent on Donald Trump. No, not really. Bitcoin isn't dependent on Donald Trump. It's the entire global financial markets that are dependent on him. But they're not really dependent on Donald Trump. They're dependent on the US economy, on the US financial market, because that's really the one setting the tone. Europe has nothing to say, but the US is setting the tone here. And now, take this in, and then we'll also put it all into perspective, whether a recession is coming, what the current risks look like, the chances of a recession, and what all this means for Bitcoin.
Can you give us a sense of whether or not we are going to get clarity for the business community?
Well, I think so. But, the tariffs could go up as time goes by, and they may go up. And, I don't know if it's predictability. I think
so that's not clarity?
No, I think that they say that. It sounds good to say. But for years, the globalists, the big...
So what he's doing here is pretty much the worst case scenario he could come up with. Because here he's being asked on Fox News, hey, what's going on? Can we get some clarity on the tariffs, like the customs duties? Can we get some clarity on how things are going to move forward for the business community? Because what puts pressure on the stock markets, what puts pressure on the financial markets, isn't just when, for example, bad news comes. But what's even worse than bad news is uncertainty. As soon as we have uncertainties in the market, capital gets pulled out. Then you go into risk-off mode. And yeah, that might be good for risk-off assets like gold or government bonds. But for risk-on assets like Bitcoin or tech stocks or something like that, it's absolute poison. And he made it very clear, yeah, I don't really know for sure. Maybe the rates will go even higher. I can definitely see the tariffs going even higher so that we have higher customs duties here. And this is a potential bomb. He's dropping here one that could be set off, so he could set that off at any time. We now know that the tariffs or duties could potentially be raised again. And if that happens, then it's very likely that the markets will correct downward again. And therefore, do we really have to, let's say, look at Donald Trump here too? I mean, he might not be able to raise the tariffs indefinitely, at least not with what's going on here in Canada, Mexico, and so on. China has already raised the tariffs twice. But what could still be possible with all the BRICS nations is that he also said, hey, if they don't do any trade with the dollar or something like that, then he can impose up to 100% tariffs on the BRICS nations. And that would definitely be a game changer. So we definitely still have potential here. Keep selling off, even though I have to say, like I said, that these are all just short-term stories. Everything that's happening here, these are short-term things. In the long run, things look hyper-bullish for Bitcoin. Everything is now short and medium-term, where things are a bit pressured, where there's uncertainty, and where the global financial markets are very, very shaky. But even if a recession were to hit and whatever, the money machines will get cranked up again. Then Bitcoin will rise again afterwards. But now let's take a look at another statement from Donald Trump.
Ukraine and the blow up the other day with Zelensky. Let me stay on the economy for a moment, because there are rising worries about a slowdown. You've got the Atlanta Federal Reserve saying we're going to have a contraction in the first quarter. Look, I know that you inherited a mess, and you said that the other night.
I've only been here.
But are you expecting a recession this year?
I hate to predict things like that. There is a period of transition, because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always...
He is now being asked about a recession, and this theoretically brings even more uncertainty into the market because he is not saying clearly, hey, is there going to be a recession or not? He just says, yes, it's very difficult for him to predict, which is true. But he also does not rule out the possibility of a recession because he simply says that what we are doing here is a very, very difficult undertaking because we want to bring prosperity back to the United States. And what he means by that is that things could get really tough in the short term. I talked about this in the last video too, that Donald Trump is taking on short-term shocks to stabilize the economy. In the long run, even with the Department of Government Efficiency, something similar happened in Argentina. Sure, for example, we have here somehow. Just throw half of the government bonds out the door. Sure, you have higher unemployment, and yeah, people start freaking out and all that. But in the long run, it's better because then all the bullshit jobs and stuff like that are gone. That's just one example. They also mentioned the Fed forecast from the Federal Reserve in Atlanta, which had a really, really bad outlook. Declining economic growth and a lot of other things that would indicate a recession is coming. And there are like two factors. That means, on one hand, Donald Trump could intentionally drive the US into a recession, which I mentioned in the last video, to lower interest rates. So, Donald Trump keeps saying it over and over, hey, I want to lower interest rates, I want to lower interest rates, I want to lower interest rates. If the Federal Reserve doesn't go along with it, then the only tool Donald Trump has to lower interest rates is either a stock market crash, a recession, or a war. But it looks like he doesn't want to go to war. So a stock correction or a recession would be the options. The second possibility, but like I said, I don't want to imply anything about Donald Trump or anything like that. The next thing is that, for example, the tactic is to have a lot of pain at the beginning and then at the end of his term, he's out as president, and that's usually how it goes. For example, when there's an economic problem, it's often propped up by cheap money, a whole lot of cheap money. And if you go into withdrawal here, then there are going to be some big problems at first. For example, if you make any economic changes here, like shrinking the government, and the state is like a big exhaling tumor that is now lashing out. And if you beat that, of course, then you just go through chemotherapy first. Or then, you have to fast first or do something. And that's the cleansing period, the detox period, where both Donald Trump and Elon Musk are also talking. And so it goes on. And that could lead to it being very, very painful in the short term, but in the long run, it could actually be quite uplifting for the economy. The Kobeissi Letter also wrote some very interesting things about this. He says that by 2025, US debts amounting to $9.2 trillion will either be due or need to be refinanced. I mean, just think about it, that's almost 5 times the market cap of Bitcoin. Not quite 4 to 5 times that much. And so much debt needs to be refinanced. So, basically, they need to find follow-up loans. And then it said here, plain and simple, the fastest way to lower interest rates ahead of this massive refinancing would be a recession. And that's also what I've already said, that a recession could definitely play into Donald Trump's hands. In the last 2 months, the yield on the 10-year bond has fallen by about 60 basis points here in the U.S. This is partly due to the expectation of cuts in the Dodge deficit spending, meaning that you now have a more stable country. But the increasing uncertainties and the rising likelihood of a recession in the U.S. are also reasons for that. A recession would practically guarantee interest rate cuts. So why are interest rates falling now that a recession is looming? Yeah, because people might want to move into safer investments. They might all want to move into government bonds and steer clear of Bitcoin, avoiding risk assets altogether, and so on. And then we have a capital shift from the most high-risk assets here, like Bitcoin and tech stocks, and they all move into bonds. They go into the 10-year bond, and then interest rates fall. And on top of that, there's the effect of the Department of Government Efficiency. And then we also have the inverted yield curve here. That's the thing when people say, okay, long-term I'm more bullish than short-term because the 3-month rates are higher than the 10-year bonds. And then the economy just says, hey, short-term, am I being very, very bearish? And that's why the short-term interest rate is higher than the long-term rate, which really doesn't make any sense. Normally, the long-term interest rate should be much higher than the short-term interest rate. But when the economy is more bearish in the short term than in the long term, then we see the inverted yield curve. That has always been an indicator in the past for a recession. It doesn't have to happen that way, but it could. The Kobeissi Letter is going even further here. Here's an interesting graphic that you can see. And he says here about every recession in the U.S. Since the 1980s, there has been a peak in the federal funds rate. When economic growth stagnates, the Fed stimulates the economy. This means lowering interest rates to reduce the cost of capital and encourage spending. So this is actually completely easy here. That means when the economy stagnates, you pump money in, and then you flood the whole economy with cash. And then it goes back to the moon. So we already knew that. I've talked about it a few times before. Now here comes another interesting point, because now we're getting into the whole oil story and how this plays into it. It says here, since the start of the trade war, economic growth forecasts in the US have plummeted. Oil prices have also fallen to a 6-month low, and here it gets even more interesting. President Trump has said multiple times that he wants low oil prices to reduce inflation. In January, Trump claimed he had a solution for the Fed's fight against inflation that's been going on for over 3 years. He is calling on OPEC to lower oil prices and the world to cut interest rates. However, the quickest way to lower oil prices would be a recession that reduces demand. So, the next thing that the Kobeissi Letter is predicting is that, okay, by drifting the US economy into a recession, the oil prices will drop because suddenly the industry doesn't need oil anymore. Then oil prices go down and inflation could fall as well. I mean, that's quite a funny rhyme. Whether it actually turns out that way, I don't know. Because a recession could also lead to other nasty consequences. That could definitely be inflationary. But Donald Trump has said time and again that he wants energy prices to go down and he wants inflation to drop. And he also wants interest rates to go down. On the other hand, we have charts like these. Here, for example, you can see that inflation expectations are now rising massively. You can see it all the way to the right. Here you can see how inflation expectations are skyrocketing. And here are the US consumer inflation data. It says here that inflation is expected to rise to over 6% in the next 12 months. The highest level since May 2023. And these are just here, the expectations for US consumer inflation, shared here by the Kobeissi Letter. That's the third consecutive monthly increase in expectations. Inflation is rising, and interest rate cuts would be delayed. And the markets are slowly starting to price in a recession. Donald Trump also said, hey, he doesn't care about the stock markets right now. He's not paying attention to that. He's looking at the whole thing only in the long term. He's looking at the whole thing like China does on a 100-year scale or something, but not in the short term. And that's why he's playing with fire here and could definitely keep pushing for Bitcoin and the stock markets to sell off even more. The Kobeissi Letter writes here about this classification that he doesn't watch the stock markets. He's ready to do whatever it takes to lower interest rates and reduce the trade deficit, even if it means we might head into a recession. So, they have a bit of a more pessimistic view on the whole thing. They definitely think that Donald Trump wants to crash the whole market. I'm still a bit skeptical about that. Maybe I'm just too naive. Feel free to write it in the comments. Am I being too naive? Or is the Kobeissi Letter right when he says that Donald Trump actually wants to crash the stock markets, recklessly or maybe even intentionally? That means we still have a lot of uncertainty in the market, and only when the trade uncertainty, the whole uncertainty around the Ukraine war, and the uncertainty surrounding Donald Trump settle down. And so on, once all of that settles down, and if the money supply starts to rise massively again, then we'll have the foundation to see a significant increase in Bitcoin. But in the past, we've always had situations like this. We're not in a bear market or anything like that yet, even though some people have already declared it. In my opinion, we're still in a bull market. This is just a correction. We can see this as a buying opportunity, or we can just run away feeling depressed and say, okay, hey, I'm done with this. I'm just going back to my savings account or something like that. And if you still want to buy Bitcoin, I'll give you a link below. 21 Bitcoin, where you can easily and safely buy Bitcoin. Use the code BitcoinHotel here. Here you can also save up to 20% on fees when buying Bitcoin. Let me know what you think about the whole situation. See you later. Peace out.